Now, what's the likelihood the Federal Reserve is going to cut rates in 35 days? I know we're going to do this every day, and I'm just going to show you the probabilities. You kind of get a kick out of it. If mainstream media, they're going to come in and say, okay, now the Fed might be thinking of increasing rates. They're not going to increase rates in an environment that we're seeing right now. Do you think they should? Okay, so let's go down through here. Here's the probabilities of all this stuff. There is a 95% chance at the next meeting they're not going to do anything. If you scroll all the way down, they're not going to do anything until the end of 2027. So based on this, there's no rate cuts in the cards for the Fed. So now we're going to say, okay, now what's going to go on with mortgage rates? That's why you're here. Let's get over to it. Follow crude right now. So as crude goes down, so will rates. But after that, we got to get back to the fundamentals. We'll go back and start looking at where's inflation. The next few readings are going to be hot because of the oil numbers. You know it, but a lot of economists are going to sit there and say, whoa, inflation's spiking, but you have to follow oil because oil's about 40% of our inflationary numbers. So now hopefully you learned a little bit on today's market. You follow oil, and that's where the rates are going to go, and that's also where the stock market's going to go. So if you see oil coming down, everything else is going to go opposite. You're going to see the markets rally, you're going to see cryptocurrency coins rally, and you're also going to see mortgage bonds rally. And as mortgage bonds rally, mortgage rates come down because, like I explained, as this chart goes up, mortgage rates go down. So that's what's happening today in the markets.